Hey everybody, welcome to your weekend review for the week of Monday, March 20th, 2023. And oh, what a week it was. Got some big world banking news on Monday. MBS were down 9 basis points to start the week. Treasuries hit their lowest yield since September, right at the start of European trading, as the UBS takeover of Credit Suisse was initially met with more doubt than relief. The trade gradually reversed. As the European session continued, yields ultimately broke even in the first hour of U.S. trading before bouncing just slightly lower. UBS will purchase Credit Suisse in a deal temporarily end their crisis of confidence. The Swiss bank UBS is paying 3 billion francs, $3.3 billion for its rival in an all-share deal that includes extensive government guarantees and liquidity provisions. The price per share marked a 99% decline from Credit Suisse's peak in 2007. The Swiss National Bank is offering a 100 billion franc liquidity assistance to UBS, while the government is granting 9 billion franc guarantee for potential losses from assets UBS is taking over. 5 years ago, Credit Suisse still had a market cap of $45 billion. Now they're getting it for 3.3. Markets reacting to Janet Yellen's speech over the weekend. Money is moving around after she said that in the future the government will only going to protect fully insured deposits. I mean, unless they decide that the bank failure would pose a systematic risk. So really clarifying nothing. This makes things tough for small banks though. There is also a lot of talk about bank stress tests. Apparently, their definition of stress was a brisk walk on a treadmill. Their worst case was a 0.5% change in the Fed funds rate in a 3-month treasury near zero. They were just a bit off on that one, almost like inflation being transitory. The leading economic indicators report, which measures 10 key areas of the economy, came in at negative 0.3% in February. This is the 11th consecutive month of easing. What's also bad is the latest cost per loan figures released by the MBA. The total loan production expenses, commission, compensation, occupancy, equipment, and other production expenses and corporate allocations increased to $12,450 per loan in the fourth quarter. Independent mortgage bankers of chartered banks reported a net loss of $2,812 per loan they originated in the fourth quarter of 2022. Yeah, that's losing $3,000 per loan. If there happened to be some significant economic activity today or in the next 2 mornings, financial markets might wait to see what it implied before diving headfirst into the pastime of overanalyzing Fed rate hike odds. With essentially no relevant data between now and then, the task in hand is clear. Get in position for the Fed if you're not already, and react to any major developments in the banking sector. Monday's early trading suggests the markets are actually right about where they want to be after the overnight volatility surrounding UBS takeover of Credit Suisse. The other day ended up being at 100.61, which is down 28 basis points on the 5.5. At 100.61, that puts us right here in this very consolidated trade line of a ceiling of 101 and a floor at 100.614. So we're right around that floor. If that breaks, our next support level is the 100-day moving average, which is only about 20 basis points below that. So we'll have to see what happens tomorrow.